Welcome to Life Theory, your go-to source for insights and strategies that drive success. Today, we delve into a topic that shapes our lives significantly, yet remains shrouded in mystery for many: money management. We will unveil the 10 effective strategies that can transform your relationship with money, empowering you to take control of your finances and your future. From understanding the importance of financial literacy to leveraging technology for smarter financial decisions, we've got it all covered. Number 1. The never-ending journey of financial literacy improvement. Financial literacy is not about becoming an expert overnight. Instead, it's about understanding the fundamentals of finance and continuously building on this foundation. It's about being curious, asking questions, and seeking answers. It's about recognizing that financial education is a lifelong commitment and not a one-time endeavor. The benefits of financial literacy extend beyond personal finance. It equips you with the skills necessary to navigate the world of business and entrepreneurship. It empowers you to turn challenges into opportunities and dreams into reality. It provides the confidence to take calculated risks and the resilience to bounce back from financial setbacks. Improving your financial literacy involves a variety of activities. Reading books, attending workshops, and taking online courses are excellent ways to deepen your understanding. Engaging with financial advisors, networking with industry professionals, and even participating in investment clubs can provide invaluable insights. Moreover, technology has made financial education accessible to everyone. Countless apps and websites offer resources ranging from budgeting tools to investment advice. Podcasts and YouTube channels offer easy-to-understand explanations of complex financial concepts. Remember, financial literacy is not a luxury, it's a necessity. It's not about how much money you have, it's about how well you manage it. It's not about predicting the future, it's about preparing for it. The journey of financial literacy is one of empowerment, freedom, and peace of mind. Number 2. Establishing a monthly financial plan. Creating a monthly financial plan starts with understanding your income and expenses. It's about knowing where your money comes from and where it goes. It involves listing all sources of income and categorizing all expenses, no matter how small or insignificant they may seem. This process provides a clear picture of your financial health, highlighting areas of strength and pinpointing opportunities for improvement. The next step is setting financial goals. These could be short-term goals like saving for a vacation or a new gadget, long-term goals like buying a house or starting a business, or even retirement goals. Your financial plan should be aligned with these goals, providing a clear path to achieving them. Budgeting is an essential part of any financial plan. It involves allocating funds to different categories based on your expenses and financial goals. It's a tool that helps you make conscious decisions about your spending, ensuring that your money is spent on things that truly matter to you. Moreover, a good financial plan also involves setting aside funds for unexpected expenses. Life is full of surprises, and not all of them are pleasant. An emergency fund serves as a financial safety net, providing peace of mind and financial stability in times of crisis. Establishing a monthly financial plan is not a one-time task. It requires regular review and adjustment based on changes in income, expenses, and financial goals. It's a living document that evolves with you, reflecting your changing needs, priorities, and aspirations. A well-planned budget isn't about restriction, it's about liberation. It's about taking control of your finances and directing them towards your goals. It's about making your money work for you, not the other way around. So, get started on your monthly financial plan today and take a step closer to financial freedom. Stay with us as we continue to explore the path to financial mastery here at Life Theory. Number 3. Making personal finance apps your financial companions. In this digital age, technology is an integral part of our lives, and personal finance is no exception. Personal finance apps have revolutionized the way we manage our money, making it easier, faster, and more convenient. They are like having a personal finance manager in your pocket, available round the clock to help you make informed financial decisions. These apps come with a host of features designed to make money management a breeze. They help you track your income and expenses, enabling you to see where your money is going at a glance. They provide real-time updates, alerts, and reminders to help you stay on top of your finances. Some apps even offer budgeting tools, allowing you to allocate funds to different categories and monitor your spending against these budgets. Investment tracking is another feature offered by many personal finance apps. They allow you to keep an eye on your investment portfolio, providing updates on its performance and insights into potential investment opportunities. Then there are apps that offer bill payment and money transfer services, saving you the hassle of going to the bank or writing checks. They ensure that your bills are paid on time, helping you avoid late payment fees and maintain a good credit score. Some personal finance apps also offer financial education resources, helping you improve your financial literacy and make better financial decisions. Despite the many benefits, it's important to choose a personal finance app that suits your needs and preferences. Look for an app that's user-friendly, secure, and offers the features you need. And remember, while these apps can be very helpful, they're just tools. They can provide information and insights, but the final decision is always yours. Incorporating personal finance apps into your financial routine can be a game changer, helping you take control of your finances and move closer to your financial goals. As we continue to delve into the world of financial mastery, stay tuned to Life Theory for more insights and strategies. Number 4. The safety net of an emergency fund. An emergency fund, or as we like to call it, a financial safety net, is an essential part of any well-rounded financial plan. It's a stash of money set aside to cover the financial surprises life throws your way. These unexpected events can be anything from an unplanned medical expense, a major car repair, or even a sudden job loss. Why is having an emergency fund so crucial? Well, it gives you peace of mind. It's comforting to know that you have money set aside to cover unexpected expenses without having to resort to credit cards or loans. It allows you to tackle these emergencies head-on without derailing your financial plans or incurring additional debt. The size of your emergency fund can depend on various factors, such as your financial situation, lifestyle, monthly costs, and whether you have dependents. A commonly recommended guideline is to have enough to cover 3 to 6 months' worth of living expenses. Some financial experts might even suggest saving up to a year's worth of expenses, especially if you're self-employed or in an unstable job market. Building an emergency fund might sound daunting, but it doesn't have to be. Start small, and aim to save a specific amount from your income each month. Even small contributions can add up over time. You might also consider keeping this fund in a separate, easily accessible account to avoid temptation and to ensure it's there when you need it. Remember, an emergency fund isn't an investment. It's insurance for your financial plan. It's there to protect you when things go wrong, not to earn a high rate of return. The key is to have the money available when you need it. Number 5. Keeping tabs on regular outflows. What are regular outflows, you ask? Simply put, they are the recurring expenses that make up the bulk of your budget, your rent or mortgage, utilities, groceries, transportation costs, insurance payments, and so on. These costs can sneak up on us, quietly draining our accounts if we're not careful. That's why it's crucial to keep tabs on these expenditures. In the world of personal finance, awareness is power. By keeping a close eye on your regular outflows, you become aware of your spending habits. You might discover that you're spending more on dining out than you thought, or that your subscription services are really adding up. This awareness is the first step towards changing potentially harmful financial habits. One effective way to track your regular outflows is by reviewing your bank and credit card statements each month. This can give you a clear picture of where your money is going. If you notice an expense that seems high, you can then investigate further and decide whether it's necessary or if there are ways to reduce it. Another beneficial strategy is to automate your bill payments. Not only does this ensure that you won't miss a payment, but it also gives you a clear picture of when and how much money will be going out of your account each month. Lastly, consider using a budgeting tool or app. Many of these tools allow you to categorize your expenses, making it easy to see how much you're spending in different areas. They can also alert you when you're approaching your budget limit in a particular category. Remember, the goal here isn't to eliminate all of your regular outflows. After all, we all have bills to pay. Instead, the objective is to understand these outflows so you can manage them effectively, leaving more room in your budget for savings and investments. Number 6. Setting and securing monthly savings targets. Saving money is a crucial part of any financial plan. It's what enables us to weather financial storms, seize investment opportunities, and ultimately build wealth. But saving can often feel like a daunting task, especially if we're not sure where to start or how much to set aside. This is where setting a monthly savings target comes in. Having a specific goal can make the task of saving feel more manageable and give you something concrete to work towards. It can also provide a sense of satisfaction and accomplishment when you reach your target. So, how do you determine your monthly savings target? A good rule of thumb is to aim to save at least 20% of your income each month. However, the right amount for you will depend on your income, expenses, and financial goals. You might need to save more if you're aiming for early retirement or planning a large purchase, for example. Once you've set your target, the next step is to secure it. This means making your savings a non-negotiable part of your budget. One effective way to do this is by adopting a pay-yourself-first approach. This involves setting aside your savings as soon as you receive your income, before you start paying your bills or other expenses. Another strategy is to automate your savings. Many banks offer automatic transfers, which can move a specified amount from your checking account to your savings account each month. This takes the decision-making out of the process and ensures that saving happens consistently. Securing your savings also involves protecting them. This means resisting the temptation to dip into your savings for non-emergencies. Having a separate emergency fund can help with this, as it provides a safety net for unexpected expenses. Number 7. Taming your debt beast. Debt is like a beast. Left unchecked, it grows and can consume our financial lives. It's easy to feel intimidated, especially when the numbers keep growing due to interest and fees. The key to regaining control is to confront it head-on, understand it, and devise a plan to tame it. Firstly, you need to get a clear picture of your debt. List all your debts, including the amount owed, the interest rate, and the minimum monthly payments. This will give you a complete view of the beast you're dealing with. Once you have a clear understanding of your debt, start formulating a plan to tame it. There are various strategies you can employ, such as the debt snowball or debt avalanche methods. The snowball method involves paying off the smallest debt first to gain momentum, while the avalanche method targets the debt with the highest interest rate first, which can save you money in the long run. Another essential aspect of taming your debt beast is to stop it from growing. This involves curbing your borrowing habits and avoiding unnecessary expenses. Consider using a debit card or cash for daily expenses to keep your spending in check. Finally, while you're focused on taming your debt, don't neglect your savings. Having a safety net can help you avoid falling back into the debt trap if unexpected expenses arise. Remember, taming your debt beast is not an overnight process. It requires consistency, discipline, and patience. But with a clear plan and determination, you can conquer your debt and regain control over your financial life. Number 8. Leverage price comparisons via apps and websites. In the digital age, one of the major advantages is the ability to compare prices from different vendors at the click of a button. This can be a game changer when it comes to managing your finances efficiently. Let's explore how you can leverage this to your benefit. Firstly, there are numerous price comparison apps and websites available that can help you find the best deals. These platforms compile prices from various online retailers to allow you to compare and choose the best price for a product. Some even provide price history charts, reviews, and alerts when prices drop, equipping you with all the information you need to make an informed purchase decision. These tools not only help you save money but also time. Instead of hopping from one website to another to find the best deal, you can get all the information in one place. In the long run, this could translate to substantial savings. However, while using these tools, it's crucial to consider other factors such as shipping costs and delivery times. Sometimes a product may appear cheaper, but when added shipping costs, it might end up being more expensive. So, always ensure to factor in all costs before making a purchase decision. Remember, being a savvy shopper is about more than just finding the lowest price. It's about understanding the value of your purchases and ensuring they align with your financial goals. Number 9. Monitoring petty cash expenditure. Often, it's the small, frequent expenses that tend to slip under the radar, yet they can add up to a substantial sum over time. That daily coffee on the way to work, the occasional takeout meal, or the impulse buys while grocery shopping can all add up and consume a larger chunk of your budget than you might realize. So, how do you ensure that these sneaky spendings don't derail your financial goals? The key lies in meticulous tracking and mindful spending. In today's digital age, there are numerous apps that can help you track every penny spent. From categorizing your expenses to setting up alerts for overspending, these apps can be your personal finance manager, helping you keep a tab on where your money goes. But technology is only a tool, the real change comes from within. It's crucial to cultivate a habit of mindful spending. Before making a purchase, ask yourself if it's a need or a want, if it aligns with your financial goals, and if there are cheaper alternatives available. This simple habit can help you cut down unnecessary expenses and save more. Remember, every penny counts when it comes to building wealth. By monitoring your petty cash expenditure, you're not just saving money, you're taking charge of your financial future. Number 10. The role of a budget in significant purchases. Large spending decisions often have far-reaching implications on our financial health. Be it a new car, a house, or even a high-end gadget, these purchases require a considerable outlay of funds. So, where does a budget fit into this scenario? A well-crafted budget is like a financial roadmap. It gives you a clear picture of your income, expenses, savings, and financial goals. Before making a significant purchase, consulting your budget can provide valuable insights. It allows you to assess whether the purchase aligns with your financial goals, whether it's affordable without compromising your savings or causing financial strain, and whether the timing is right. In some cases, your budget may indicate that it's best to delay the purchase, save for it, or even reconsider it. This isn't a signal of defeat, but rather a sign of financial prudence. Remember, the goal isn't just to make the purchase, but to do so in a way that doesn't jeopardize your financial stability. Also, consider using a sinking fund, a strategic saving method for substantial future purchases. Allocate a portion of your income every month towards this fund, and when the time comes for the big purchase, you won't have to disrupt your regular financial flow. With a budget at your side, you're not just spending money, you're making informed financial decisions. So, as you navigate your path to financial prosperity, let your budget be your guide. These aren't merely tips or tricks, they are fundamental shifts in understanding and behavior that can unlock your financial potential. Remember, being savvy with money isn't about amassing wealth, it's about gaining control over your financial future. Managing your finances effectively is an empowering process, one that brings you closer to your dreams and aspirations. Whether it's buying a new home, launching your own business, or securing a comfortable retirement, effective money management is the key that opens the door to these goals. Here at Life Theory, we're committed to guiding you on this journey, providing the tools, knowledge, and inspiration you need to achieve your financial dreams. It's been a pleasure to share these insights with you, and we hope they ignite a spark of financial empowerment in your life. Thank you for joining us today. Remember, your path to success is a continuous journey, and every step forward, no matter how small, brings you closer to your goals. Keep learning, keep growing, and keep rising. Until next time, this is Life Theory, signing off.